Alright. What's going on? This is another video live from the Lion's Den with yours truly, LionOfAllTradez. Here with a short segment, and it's called Bitcoin Meltdown. And we're doing this raw, unrehearsed, and we're going to be taking a look at what's happening with Bitcoin, because for the last 5-6 hours Bitcoin has been falling off a cliff, and we're going to find out few possible reasons why. And we're gonna go ahead and just give a quick disclaimer. Of course, anything and everything being said here on this video slash live stream, whatever you want to call it, is strictly in my opinion, and none of this is financial advice. This is just for educational research and entertainment purposes. Just know that you're your own decision maker of your investments and what you put your money into. As long as you know what you're doing, you set your limits and you manage your risks. And as long as you're making money, that's what matters. And you make sure that you do not let them take a single penny back. But let's go ahead and move along with this and show you what the result is right now. As of now, alright, so again, Bitcoin has been falling off a cliff for the past 5-6 hours. It's 12:32 a.m. July 25th, 2025, Friday. TGIF to everybody and the fam here in the Lion's Den. And we can clearly see right off the bat Bitcoin falling off that cliff, and that cliff meaning the 200-day period simple moving average, which is that fat lavender purple-ish color that you see running across the chart. And then you have the 9 and 20 EMA combo with the 50-day period SMA. Alright, so you already see that there was a transition here from bullish to bearish. These little circles that you see here. So from bullish to bearish, and then everything just became bearish afterwards in a bearish divergence. And as you know, Bitcoin had been rallying for the past week or so. So we take a look at the daily chart for Bitcoin. You can see how much it has grown. It has moved up on an uptrend. Of course, you have your swings and everything, but ever since the inauguration of Trump into presidency, only thing Bitcoin has been doing is been moving up. Consolidation, moving up. It took a temporary dip right around March into April of this year, and then rose dramatically afterwards to all-time highs, I should say, to $123,217.39. And now we have a situation right now where things are starting to topple over, and you can see it here clearly on the daily chart for Bitcoin, as it fell over the 9 EMA and now is falling just below the 20 EMA. and continuing on. So if this does follow and starts to cross under each other, there might be a lot more bearish activity than we may have not expected. And so we have to see what happens tomorrow if it does get that bearish crossover or cross under, whatever you want to call it, from the 9 to the 20 EMA. And then maybe next week we'll see, or probably the weekend, we'll see this try to attempt to retest the 50-day period SMA, and that's right around 110,000 and $377, slowly climbing. It could be probably around $112,000 by then, but we will see what happens. But let's go ahead and figure out what could be the cause of this sell-off, which in fact it is showing a bit of a bounce, and it could be a dead cat bounce, a fake out, and then continuation to the downside, or it could just be that Bitcoin has fully exhausted itself and now all the buyers are coming in and trying to prop this thing back up, probably back over 117,000. But as of right now, yeah, because it does look bearish on the larger time frames too, even on the hourly, and everything else below that. Okay. Now I saw this article that I ran into, and it says here, this article that I ran into, it says, bubble bursting, take care. Rich Dad, Poor Dad author Robert Kiyosaki warns of gold, silver, and Bitcoin price crash soon. Now, why would gold and silver also crash as well at the same time, knowing that those type of assets are deflationary, especially if the dollar index has been falling for a while now? If we take a look at the dollar index on the we'll take a look at it on the daily. I was about to say dollar chart, daily chart. Look at where it came from here as of January 11th. He had this at 110.17, and from there the dollar index had been declining all the way to as low as 96.37, and it's been a long time since it's ever crossed that level, and the last time was around February of 2022, and then once again around June of 2020, and where it had found the bottom of around 88, 89 in the index, dollar index. And for those of you who realized, that was during the pandemic, and from there, when everything started to open back up, the economy started to boom, so did the dollar index. So I went back from being 88, 89 to as high as 115, I want to say. But now it's it's looking like it double topped, and it's on its way back down. So just to show you that quickly. Now, for some reason, I am not able to read this, so I just wanted to, let's see, maybe I can be able to, yeah, it's that whole thing again. That sucks. Let's see, maybe I can go like this. Come on. Come on. maybe I can go ahead and read that. Let me paste this here, and I'll read it off here on ChatGPT. So let's see, it says here, Kiyosaki has long encouraged investors to buy real assets when prices go down. He said he would continue to follow this strategy if there is a crash. His forecast reflects a common investing approach, buying valuable assets at lower prices during economic downturns. Robert Kiyosaki's earlier prediction on silver. In a previous post on X, Kiyosaki predicted that silver prices might rise to twice their current value, highlighting his positive outlook on the metal. And he said silver remains heavily undervalued and advised investors to think about including it in their investment plans. Criticism of saving in fiat money. Kiyosaki repeated his long-held view that saving traditional money is not a good financial plan. He wrote that savers are losers and criticized the U.S. Federal Reserve, calling its printed currency quote-unquote fake banknotes, he said. So he says, stop saving fake dollars, start saving real gold, silver, and Bitcoin. He cited past events such as the 1987 market crash and the 2019 repo market crisis to argue that the U.S. Fed made things worse by printing money. And Kiyosaki claims this adds to inflation and weakens the value of fiat currency. Cautious on Bitcoin despite new highs, even as Bitcoin recently touched an all-time high, Kiyosaki said he is not adding to his holdings for now, and he stated he will wait to see how the economy moves, drawing a comparison with Warren Buffett. He noted, and Buffett said, is sitting on billions in cash, waiting for bargains. I am doing the same. Kiyosaki's remarks underline the risks and timing involved in investing in volatile markets, and while he supports gold, silver, and Bitcoin, he advised waiting for the right moment to enter. A strategy for uncertain times. Kiyosaki's comments highlight his belief that real assets are better than cash savings, especially during market uncertainty. He urged people to prepare for possible downturns by keeping cash ready to buy when prices fall. His outlook encourages a proactive investment approach while warning against relying too heavily on traditional money-saving methods. Alright, so that was that article on that website that apparently I couldn't even access to, so I had to quickly just highlight whatever I could and copy and paste it here. I wonder, let's see. What does he know that other retail investors don't about Bitcoin, and why would Bitcoin crash in the first place? Alright, this is just an opinionated question, and we'll see what happens. We'll see what happens in response to this. Hopefully you can be able to hear my voice, but everything I pretty much read to you here, and this is the response on ChatGPT. Remember that ChatGPT can make mistakes, and just so you know that this is just for research purposes and entertainment purposes as well. Now, Robert Kiyosaki's cautious stance on Bitcoin, despite being a vocal advocate for it over the years, suggests he may understand some deeper macroeconomic signals and institutional behavior that many retail investors overlook. So ChatGPT breaks it down here for us and asks, what does Kiyosaki know that others might not? Number one is cycles and market psychology. Now, Kiyosaki understands that markets move in cycles. I'm pretty sure that a majority of you guys know about that too as well. Bullish cycles, bearish cycles, all kinds of cycles in the markets. All right, often manipulated or exaggerated by central bank policy, liquidity flows, and investor sentiment. Bitcoin follows boom-bust cycles, driven by halvings, hype, and retail FOMO, but also heavily influenced by economic tightening or easing. Number two, institutional timing and liquidity. Major investors like Buffett or BlackRock don't buy at peaks. Kiyosaki watches them closely and mirrors their behavior. Institutions often unload liquidity in overheated markets, causing price loops. Retail usually buys when it's quote unquote hot and sells when it's too late. Right on. So, number three, geopolitical and regulatory shocks. Kiyosaki likely anticipates potential regulatory tightening, especially after U.S. actions like the Genius Act proposing stablecoin regulation, the SEC lawsuits against major crypto exchanges, CBDCs, which is also known as central bank digital currencies, being pushed as potential quote-unquote state-backed replacements, and Bitcoin might be allowed to succeed, but only under surveillance or control, and any sudden shift in government stance could trigger panic. Number four, liquidity crunch risk. A crash could come not from Bitcoin itself, but from an external liquidity crunch, like, for example, credit markets freezing up, banks tightening lending, sovereign debt crisis, like US debt, or Japanese carry trade unwinding, and etc. Bitcoin and risk assets fall together when cash is king during a panic. Number five, smart money exiting, which could be the case too as well, especially with that 5 to 6 hours of sell-offs. But that, again, could change. But if it does continue, this would be a concern for a good amount of people. Excuse me. Oh my god. So smart money exiting. So on-chain data may show that whales are selling into strength while retail continues to buy. Kiyosaki might be watching these signals, similar to how Warren Buffett watches insider selling, balance sheets, and volatility. Now, why would Bitcoin crash? Here are key catalysts Kiyosaki may be wary of. Now, the first cause is regulatory crackdown. For example, the Fed, SEC, and International Monetary Fund mandates. So the effect of that would shake investor confidence and institutions exiting. Second cause, market liquidity drain. So that would include rate hikes, quantitative tightening, and debt crises. And the effect, institutions sell off crypto to cover losses elsewhere. You know, for example, if institutions are being margin called at a huge amount, then they would have no other choice but to sell off their crypto to cover their losses and close their positions and cover certain stocks. Third cause, systemic banking failure or credit event. The effect would be a mass liquidation of assets, including Bitcoin. Fourth cause, Tether or stablecoin collapse. Uh-huh. And the effect of that triggers trust crises in crypto markets. So think FTX style panic. Next cause, retail overconfidence at highs. And the effect sets up for smart money to exit, then orchestrate a crash. And the last cause, global conflict or cybersecurity event. The effect forces rotation into cash or defense sectors, selling risk assets like Bitcoin. So Kiyosaki's message in context, he isn't anti-Bitcoin, he's anti-blind enthusiasm. He believes you don't buy at the top just because number go up. Instead, hold cash and wait for forced selling when assets are on sale. Real wealth is built when everyone is panicking, not celebrating. So here are the takeaways for retail investors. Remember what Buffett has said, that be fearful when others are greedy, and what Kiyosaki has said too, stop saving fake dollars, save real assets, but wait for the crash. If you follow Kiyosaki's lens, watch macro triggers like Fed policy, war, and debt defaults. Hold cash like Buffett, and buy Bitcoin, silver, and gold, but only when blood is in the streets. Now, in this article released yesterday at 11:43 p.m. Eastern Time, here titled "Bitcoin News Today: Bitcoin plummets below $116,000 amid macroeconomic pressures and regulatory concerns." Here it says Bitcoin fell below 116,000, breaching a key support level and triggering automated sell orders amid macroeconomic pressures and regulatory concerns. The drop reflects historical correction patterns but remains smaller than past crashes, with analysts citing inflation, interest rates, and whale activity as contributing factors. You can skip that. Let's see. Okay. Yeah. So I actually wanted to follow up with the Japanese carry trade unwinding and Bitcoin. And I just questioned. So here's the question: Japanese carry trade unwinding and Bitcoin? Great question. ChatGPT says the Japanese carry trade unwind is one of the most underestimated macro risks to global financial markets, including Bitcoin. Here is how it works and why it could crush Bitcoin in a sharp systemic shock. Now, what is the Japanese carry trade? In simple terms, investors borrow in Japanese yen at ultra low interest rates and then invest in higher yielding assets like US Treasuries, tech stocks, commodities, or crypto. Now, why has this worked? Japan's interest rates have been near zero or negative for years. As long as the yen stayed weak and US assets paid higher returns, this was a safe and profitable trade. Leverage was massive. Even hedge funds, banks, and shadow banks took part. Now, what is this unwinding? When the Bank of Japan raises interest rates or the yen strengthens, it can force investors to 1. Close those trades, 2. Repatriate funds, which means convert dollars or assets back into yen, and sell risk assets like tech stocks, bonds, and even Bitcoin. Now, why the carry trade unwind hurts Bitcoin? Well, number 1, forced liquidations across markets. If the Bank of Japan tightens policy or global yields fall, traders must unwind their carry trades. This creates broad deleveraging, they sell everything, not just stocks, but crypto too, to cover losses or rebalance. So Bitcoin often gets sold in these panics because it's liquid and 24/7. So keep that in mind. Number two, liquidity shock equals risk off. So crypto thrives in a risk on environment with ample liquidity. Carry trade unwind equals liquidity vacuum. Risk assets like Bitcoin plunge together with equities and junk bonds. Number three, dollar to yen relationship impacts Bitcoin. So when the yen strengthens rapidly, it signals that global capital is reversing into safety. Bitcoin correlates inversely with the DXY and global USD liquidity. So if the US dollar weakens while yen surges, institutions flee risk and Bitcoin takes a hit. Now, the Bank of Japan is a hidden giant in global leverage. So Japanese institutions are huge global players in US treasuries, mortgage-backed securities, and even crypto VC funds. A Bank of Japan shift creates shockwaves far beyond Tokyo. Now, here's a real example. The March 2020 crash. Japanese carry trades unwound hard during global panic. The yen spiked sharply. Bitcoin dropped 50% in days as global assets were dumped in unison. So what Kiyosaki may be thinking? Kiyosaki knows the Bank of Japan recently ended yield curve control and is signaling rate hikes. If Japan hikes, carry traders are trapped and forced to unwind. And lastly, that chain reaction can crack risk markets, creating a buying opportunity in Bitcoin, but only after the crash. So key signals to watch: the USD to the Japanese yen pair, or USD JPY pair. Warning sign: a rapid drop, which includes the yen strengthening, equals unwind starting. So let's go quickly to the Japan 225. On the daily, you can see that it has been slowly on a downtrend since July 23rd, and it had a massive pump back on Tuesday from 39,600 plus to as high as 42,000. I'm going to say 42,057. And from here, it looks like it wants to do one of those like P&Ds. Here's how it looks like on the 4 hour. And mind you, this is overbought and just starting to turn back down here on the 4 hour chart for the Japan 225. Now, this could be an issue for sure. Alright, so if this drops, forget about it. And on top of that, we got the dollar index somewhat here recovering a little bit. But if we do take a look at USD and the Japanese yen, we can see that the Japanese yen is coming down. So that means, let's see, if I do it reverse, that means that the Japanese yen to the US dollar is climbing up slowly. And so that's what it means. So if the Japanese yen over the dollar starts to continue to climb up, then that's not good. So as it explained here, a rapid drop with the Japanese yen strengthening would equal the unwinding to wind starting. Now, Bank of Japan policy, the warning sign would be surprise rate hikes or tightening. The dollar index, warning sign, sudden drops would equal to dollar liquidity vanishing. Bitcoin versus gold, the warning sign, Bitcoin dropping while gold rises equals risk off signal. And then last indicator, global yield curves, warning sign, inversion, yen rally equals unwind likely underway. So we would have to see, and I am going to set some alerts here just in case, just to be prepared and to make sure, because if the Japanese yen over the dollar starts to trigger these alerts on the way up, then we definitely know that something is unwinding. And the unwind is underway, or the Japanese carry trade unwind. Anyways, the Japanese carry trade unwind equals systemic stress. It means global investors must sell risk, including Bitcoin, to repay yen-denominated debt. So Kiyosaki sees this as a setup for a major buying opportunity for post-liquidation, and not a time to chase highs. Alright, so that is your conversation here from Japanese about Bitcoin, about Robert Kiyosaki's thoughts and visions, and what he thinks is happening currently, and what this can mean if the Japanese yen carry trade unwind goes into plan. Should really be taking a look at those assets. And mind you, speaking of gold and silver, alright, we've seen gold reach a high, I believe it was 3,500, and that was I want to say that was, it's hard to get it there. I'm trying to get it there, but I can't. What was that before? Let me see. I'll let you know right now. Okay, so that was April 22nd when it reached an all-time high of 3,500. This past Tuesday, almost retesting those highs at a high of 3,433. Silver on a slow uptrend, if you noticed. And notice all the silver miner companies pretty much following the trend, like Pan American Silver. You got First Majestic Silver, and then you have Hecla Mining, and then you have Core Mining, but then you also have SLV, PSLV, and others too as well, following the trend for gold and silver. And as we go back to Bitcoin, we can see that it's slowly trying to bounce on the way back up, but it's being stopped right now. It's being rejected, and of course if it stays below that 50-day period SMA on the 5-minute chart, and all of a sudden it rejects the 9 to 20 EMA crossing, it could definitely continue to go down. And that way you just want to make sure that everything else is happening as it was stated on the conversation with ChatGPT. And who knows, maybe this is actually in the works right now. We must figure out what are the odds. I mean, I feel like it's nearing. It's nearing somehow. There's a lot of signs. And what else? Look at that, even the SPY, the S&P 500 futures, just had a bearish signal here on the 920 EMA bearish cross under. These two just went underneath the 50-day period SMA. What a sell-off! And if we go ahead and check on the SPY, you can see it doing the same exact thing. It did close at a high of 635.44. It's at 635.88, but it reached as high as 636.57, which is technically the new all-time high. So what are the odds of that, huh? When will this all start going to the other side? I wonder about that. Like, where is the limit? And where is the top exactly? Because they're still trying to figure that out. But yeah, it does look like it wants to continue to move to the downside a lot more so. But anyways, that is my thoughts. I'm really curious. I wonder if it's actually going to continue to fall down. It'll fall down below 66,408. And then somewhere around 6,404 or 400. If it hits those targets afterwards during pre-market, then we have one heck of a downturn for the markets, which is something that I am actually very surprised about. Not expecting this sudden sell-off here in futures. And Russell's doing the exact same thing. You got the NASDAQ 100 futures looking like it wants to dump so hard. Probably back to like 23,370, which is his last support. Then you have the Dow Jones Industrial 2, which is also just falling below the 200 SMA on the 5-minute chart. The Japan 225 looks the same too. It's having effects. And Bitcoin is facing that rejection here. So if I zoom in, you can see pretty much here. There goes that red plus right there. I just faced a rejection. The 9 rejected the 20 EMA, and now it's falling back down. Yeah, this could definitely be the sign. So if anything, you guys do your own research. If you want to look more into the Japanese carry trade unwind. Yeah, I'm I'm just wondering myself, like how much more this could drop to. But anyways, let me go ahead and just end it on that note. And just a reminder too, while Bitcoin is dropping, the rest of the crypto market is also dropping with it, with some mentions, you know, like some meme coins like Forkcoin and I forgot which one it is. I think it's Bonk. Other than that, yeah, it's, all I see is a sea of red and XRP. Mind you, XRP was at a high of what was it, 366? The new 52-week high of 366. Now it's back down to $3.09. XLM at 41 cents, XEC is at 8 cents, XCN at 1.5 cents, HBAR at 23 cents. So yeah, Bitcoin is definitely dragging things down once again. So just keep an eye on that, and this could be another window of opportunity for people to get on this discount, or whatever you want to call it. But anyways, I'm gonna end it on that note. I just want to thank everybody for being here and listening in, and just going over a couple of things. And much love to everybody on here in the Lion's Den. And I will see you in the morning, streaming the charts live with chill music as always by yours truly, LionOfAllTradez. And I will definitely see you on the next TGIF, everybody. Love y'all. And take care of yourselves. Be safe. And if not, have a great weekend. Peace out.